Welcome to How Now, the podcast where we talk about how to live in the now. And here's your host, Kim Martin Raymond.
Peace and blessings, love and light, and welcome to this edition of the How Now podcast, where we talk about how to live in the now. I am your host, Kim Martin Raymond, and I'm a minister, spiritual life coach, holistic nutritionist, author, and founder of Redefining You, LLC, where I help my clients to realign themselves, mind, body, and spirit. And welcome to the show. You are officially here for season 6 of the How Now podcast. And if you are new to the show, welcome. You are now officially a part of the How Now family. And we've got a lot going on this year. This year, we are talking about execution. We've been talking about toolboxes. We've been talking about the 365-day challenge, where I was challenging people to create healthy habits so that way we have overall wellness. And that's what we're going to be focusing on this year. We're going to be talking about financial fitness. We're going to be talking about spirit body transformation, where we're going to be talking about physical health and wellness, and we're going to be talking about spiritual wellness, and then also how to live a successful and peaceful life, living your life on purpose. And so there are so many things that we're going to be doing in this season 6 of the How Now podcast. And so I'm glad that you are here to be a part of that. And like I said, if you are new, be sure to go to my website, www.hownowpodcast.com, and click on your favorite podcast platform. And be sure to like, follow, share, and subscribe. You could also scroll to the bottom of the page and click on the banner for this week's show, and it will take you to the How Now YouTube channel, where you could check out my playlist like Tuesday, where I share a scripture verse each week. And you can also see what was going on in the 365-day challenge that we did for 2025. And then you can also check out some of the shows that you may have missed. Like I said, we're in season 6. So there's plenty for you to explore and find out going into what's going on in my now. Okay, so again, that's www.hownowpodcast.com. Okay, so let's get into tonight's show. And like I said, we're going to be having featured co-hosts that are going to be here with me each month. And this week, we are going to be meeting with the beautiful Leah Garcia, and we are going to be talking about financial fitness. So, of course, as is customary with the How Now podcast, I'm going to have Leah to introduce herself to those who may not know her. Take it away.
Absolutely. It's a pleasure and an honor to be here with your How Now audience. My name is Leah Garcia, and I am the Dynasty Builder. And I really specialize in helping high-achieving entrepreneurs and business owners properly protect, distribute, and transfer their wealth so they can build that legacy, right? If we're working so hard to produce all of this income and achieve all of these things and have all these assets, it only makes sense to protect that wealth for the next generation.
Absolutely. Absolutely. I am just thrilled beyond belief to share this space with you. And like I said, we want to talk about financial fitness because that is such an integral part of us being able to maintain overall wellness. If our finances are challenged, then we may not be able to have the resources that we need to buy food that we need to change our eating habits, or to be able to get the tools that we need for physical fitness, or that, be able to finance seeing a specialist if we have some issues that we need to deal with that are, emotionally or mentally charged. And so there are so many things that are connected with our financial fitness that can help to, create a overall wellness for us. And especially with the finances, especially when it comes to medical, we talked a little bit about that the last time that you were here, and really being able to not have people have to choose their care because of finances. We don't want that to be a barrier for people to be able to, do the things that they need to do so that overall wellness is achieved. And so, like I said, last time we talked about tracking your finances, the last time that you were here, and we talked about the importance of making sure that you know where you are so that you know where you're going. It's important to understand what was going on in your finances and why you may be in the financial state that you're in. So let's backtrack a little bit and talk a little bit about that again, just for those who may have missed it. And then we can talk about what our topic is for this month.
Yeah, that's so great. Thank you for kind of rewinding that for people who weren't here. And just it's a great recap, right? And you alluded to it, is that how can we achieve where we want to go if we don't know where we are? You're in there in Georgia, and if you said, well, Leah, how to get to Monterey, I'd have to first ask, well, where are you? Where are you starting from? And so many times we don't want to look towards our money because we feel like we're going to judge ourselves or other people are going to judge us. But really, all progress starts by telling the truth. So we have to be willing to take off the gloves, pull back the curtains, and look at the good, bad, and ugly. There's no judgment here because we all start somewhere. And what I find is the people who have the most success long term is those who do a financial snapshot, where they actually are tracking everything that's going out and everything that's coming in. I don't believe in budgets. I think that word should be banished from our dictionary. I'll talk about a spending plan. Budgets are punitive, and it kind of gives the essence of someone is going to tell you how you could spend your money. And I just don't do that. I bring awareness, and then you can make the decisions because you can see with clarity where your money's going and what your true debt is and what your real assets are.
Yeah, I think that's powerful because, we can't allocate funds if we don't know how much we're dealing with. Sometimes we say, oh, well, I don't have enough. And once we sit down and really look at our finances, then we can say, oh, wait a minute, I do have, I do see where I may be spending excessively, or I may have subscriptions and things that I didn't remember that I had, and it's taking money out of my account and I don't know. And it's something that I can stop. So it's like, can I stop the bleeding somewhere? Or, is it really that, my finances are tight and I have to be a little more strategic about how I am spending, the monies that I have. So that's definitely critical.
Great word, strategic. It really is about strategy. I call it money checkers versus money chess.
Yes.
We all have buckets of money. And it's how we're strategically using those dollars, how we're leveraging those dollars. Right. Most people are making three major mistakes. They're overpaying on their debt. They're overpaying on their taxes. And they're overpaying on the interest that they're paying to facilitate their lifestyle, right? Those are like three big boulders that people are not looking towards. And then they get all twisted up about spending $7 on a Starbucks. I say, spend the $7 on the Starbucks. Worry about losing money in your retirement account. Okay, we're worried about $7 Starbucks, but we just lost $50,000 in our retirement plan. Like, what's going on here?
Right. I think it's so important also, like you said, when you're talking about investing and when you're talking about, making those dollars work for you. Yeah. That's something that is critical. And that's something that I think we fail to do at times because we're not sure how to invest. We're not sure how to maximize. We're not sure how to make those dollars, stretch beyond, what they are. We see it, a dollar is a dollar, but we don't know if we take that dollar and we invest it, that we can, double or triple or quadruple that amount, if we understand, the power of that dollar and not just looking at it as just exactly what it is. I look at it as, okay, it's got a little bit more pliability to it. It's not just the paper there. What else can we do to expand beyond that? So, yeah.
For sure. Love it.
All right. So, like I said, we talked about, tracking those finances and seeing where we are and then where we're going. And so this month we're talking about life insurance.
Yes, we are.
And I thought, you said that it was a wonderful topic to talk about because, it's February, it's the month of love. We're talking about loved ones and talking about caring and having those emotional connections. And a lot of that, transfers over into life insurance and having those real conversations about, what are we leaving to our loved ones? What is the legacy that we're leaving? And what are some things that are important for us to know with regards to that insurance? So that's what we're going to be tackling tonight, right?
Yeah, for sure. And I think of it this way. Life insurance is the last love letter you can leave for your loved ones. That's a lot of L's, but I want you to really step into that. We leave a lot of assets sometimes to our loved ones, or we might leave a lot of debt, or we might leave a lot of confusion. Life insurance is very, very simple, very clear. You can make the beneficiaries very specific. You can leave 1%, 5%, 100%. You can divide them up in as many ways as you want, slice it and dice it, and it transfers in most cases tax-free to your loved one. So for me, it is truly a love letter that you can leave, that your family knows that you took the time, you invested the dollars, but you also invested the time to put that program in place so that when you're no longer here, they have something that could take care of them long term.
Absolutely. I think that that's so important. And I think that there are a lot of people that are fearful to have that conversation. You know, and I think that we need to remove some of the stigma that comes with that, because some people are, they don't want to have that conversation. Oh, I'm going to be all right. I'm going to be around for a while. And I think COVID really showed a lot of us that, it doesn't matter what health you're in, what condition you're in, your level of athleticism, the way you eat. COVID was taking people out of here. And it became a real conversation for people to talk about death and dying, and talking about, what their final wishes were. And there are a lot of people who have, family feuds that have generated because of the fact that people were not clear about what it was that they wanted. And a lot of people assumed that, well, I knew what she wanted, or I knew what he wanted. And, then it may not have been anything that that person wanted at all. So it's a challenging conversation for some to have, because there's a level of fear and tension. And sometimes people just don't want to talk about it, but it's such a necessary conversation to have.
Yeah. And here's a big misconception, especially with people who've had insurance through their employer. They think they make the decision, they pick how much they want, they just check the box, and now you have life insurance. Anything outside of your employer, you have to qualify for.
Right.
And let me break this down. This is critical, because life insurance is looking at your life expectancy. If you want to know how healthy you are, if you want to know how truly healthy you are, go and apply for life insurance. And they're going to tell you how much sunset you have, the likelihood, with very, very specific details. They can give us a real good idea of how long we have. And they look at several things. They're going to look at prescriptions, even prescriptions you didn't take. If the doctor wrote the prescription, they're going to chalk that up. Really important. So people taking these prescriptions for fun, be really careful. Okay, be really careful. They're going to look at your driving record. Are there speeding tickets? Are there suspensions in your driver's license? I had a client who her license was suspended because she didn't pay the payment. A simple oversight, but now that reflects negatively on her application to get life insurance. They're going to look at any kind of testing, lab work, EKGs, MRIs, anything that has been completed or that your doctor recommended and was not completed. They're going to look at your credit score.
Wow.
They're going to look at if you've had a bankruptcy in the last 5 years. Really important to understand. They're going to look at if you had treatment that you did not complete. So maybe you went to your doctor and then you took some medication and you felt like you're fine. If you didn't go back and the doctor gave you that little blessing and said, absolutely, you're fine, that is going to be impacting your ability to get life insurance. Our age impacts our life insurance. So there's many things that impact your life insurance. So it's not really a matter of just going and picking some life insurance off the shelf. It really is an application process, and every company accepts things a little bit differently. And smoking, even those funny cigarettes, those kind of things.
Vaping and all those other things. Yeah.
Right. There you go.
Wow. See, now that's scary. That right there is scary. Because I know some people are like, oh, well, look, I'm never going to get any life insurance because My credit is bad. I got all kinds of driving records, and I'm saying that hypothetically. I'm not saying that I
Right.
personally have those, but yeah, you have to take those things into consideration, and then especially in the African American community, and I have to say that, because I'm a part of it. uh, pre-existing conditions. A
Yeah.
lot of people, diabetes, high blood pressure, hypertension, and things like that. People who were scared to go and don't have those diagnoses and things like that. Those are going to be things, like you said, that are going to affect your application process as well. So, I think that the biggest thing is to try to eliminate some of the fear that comes with doing that. I'm not going to, growing up as a kid in the 70s, all I thought about was, what do we see all the time? The little Gerber, pay a penny and you can get life insurance, or 17 cents or whatever it is now. I don't even know what the cost is now, but that was something that we saw growing up. And we just thought, oh, okay, so if you just give a penny a day or give a penny a week or something like that, you automatically have life insurance. And as you mentioned, there's so much more to the process than just saying, oh, well, I paid it, and not even really understanding what it is that you paid for. What is it that money is going towards? What percentage of it does it cover everything? And I think that's where things kind of get, the lines kind of get blurred.
Yeah. And it can be a difficult conversation. I would say work with somebody that has multiple carriers. If you go directly to a carrier and that's all they are able to represent, that's kind of probably not the best option. You want to go to a broker who has a large platform and can pick and choose from the different carriers, because some will look more favorably over, like smoking, for example. Others are very, very strict about smoking. So it really comes from being willing to have a conversation. And that's really where it starts. I understand that it can feel a little scary, but then I would say you're probably working with the wrong person. If you're just going to go and just pick up anyone, then it probably is a difficult conversation. You want somebody that you feel comfortable with, that you can really ask real questions so that you understand what you're picking, because all the policies work a little bit differently.
That is a huge thought, or a huge recommendation for people to have. Just like you go when you shop for auto insurance, you check different carriers. You don't just go with the first one that's out there. You go and you check and you figure out what's the best rate or what's going to work best for your situation. So I love that you make that you mentioned that using a broker is something that is going to be critical, because then, like you said, they can look over all of the different programs and find one that's going to be best suited for you.
And you bring up a point that I don't know if I've ever mentioned this, but this is something that's really critical too. Think of this person, not just how they work with you, but are they going to really be there if you were to pass away and deliver that death claim and help your family? So are they somebody that's here just to sell you a life insurance policy? Or are they really here to be somebody long term? I've had many clients who've unfortunately have passed away, and I meet with the family. That's important, because now they're going to have this money. And what do their parents or grandparents or loved ones intend for them to do with this lump sum cash of money? So really important. It's really holistically thinking about long term. Do I feel comfortable enough with this person to introduce them to my heirs?
Now you make an excellent point there, because some people, like you said, will get the insurance and nobody knows that they have it until they've passed, and then they're going through the file cabinet and then they see, oh, well, what's this? Oh, they had a policy. They have no idea. And so you make an excellent point in the importance of making sure that broker or that person who you're working with meets your heirs, like you said, so that way they have a relationship with them, so that if something happens to that person, that person can say, oh, well, mom's person was Leah. And so where's her card at? So if they have any questions, and they will, that they have a point of reference. They're not just sitting there looking at the paper saying, well, I don't understand what this means. I don't understand the legalese. I don't understand the terminology. What am I supposed to do? I just know that they have a policy, but I don't know what to do with it. Right. So definitely those relationships, those connections are critical. Excuse me. Yeah. So it's definitely about the relationship. And that's something that people need. Write these things down. I hope that you have a pad and pen nearby. Get a broker and get somebody who is going to meet with your family or have a conversation with your family so that they know that you're looking for insurance, and some of the things that they're going to be discussing with that broker is definitely something worth advocating for. Just like we advocate for our medical care, we need to be advocating for those life insurance policies and things and asking the questions, especially if it's somebody who is starting a policy later on in life, correct?
Yes, for sure. And later on in life is when I would say the biggest challenges is 60 and over. They are leaving their employer or they're thinking about leaving their employer. And now all this life insurance, they had $1 million through their employer. That was $5 a month, something really, really low cost. And now suddenly they've had a heart attack, they've had cancer, they've gained some weight, and now they're 60 and over and they want to get life insurance. Can be really, really challenging. And by the way, there used to be a philosophy, buy term, invest the difference. And I used to be a subscriber to that school of thought until I had been in the business probably about 10 years. And I had met many families who bought term, never invested the difference. And now they had bought a larger home. They had an oopsie baby. They're raising their grandchildren. They have a second marriage. They need long-term care. And now their health is depleted to the point where it is cost prohibitive or it just doesn't make financial sense, or they just can't even qualify for life insurance. So if anyone in your audience is an employee and they have coverage to their family, remember, to their employer, remember that we change jobs all the time.
Right.
You may have life insurance through one company, you may not have it through another. And at some point, you're going to need to be paying those premiums full retail out of your own pocket. So the younger and healthier you get it, the more affordable it will be.
Oh, that's good to know too. These are wonderful nuggets, and these are things that we're not taught. We're not taught those things. And you think that when you leave a job, you just like, oh, I left the job, but you forget about all the things that you may have been investing in, that you may have been paying towards. Right. Some people look at, oh, well, I just want to know about the unemployment, or I just want to know about the COBRA, and is my medical insurance going to, still be covered, or how long do I have it before that lapses? That needs to be a part of the conversation too, because I don't think about the life insurance that I may have been paying into, because when you start the job, you just start signing off on a whole lot of papers. You're excited to get a check, so right. You just start signing everything and anything. And yes, I remember writing my daughter down as a beneficiary, but then when I leave the job, I'm not thinking about that anymore, and I don't stop to say, oh, well, hey, is that something that's transferable? And that's a question. When you have a life insurance policy that you have through your job, is that something that you can transfer? Is it something like, IRA or something where you can roll it over? How does that work?
That's a great question. And the legal term, right, the jargon is portable. It just means, can I take this with me? Just ask, can I take this with me? And it depends. The majority of employer plans that I see are not portable. They're not transferable. You cannot convert it into your own individual plan. They terminate once you leave your employer. If you happen to be fortunate enough where it is portable, they do allow you to take it with you. Oftentimes, it will be at a higher rate, and you have to qualify for it. Meaning they will go through medical underwriting. That's not simply a matter of, signing a paper. In all these 20 years, I've only had one client that had a fully portable life insurance policy that had no medical underwriting. And that was really a godsend, because he had been diagnosed with Lou Gehrig's disease. And so his health was very, very much waned. His plan was portable, and they were able to continue the policy. They did have to pay a higher premium each month, significantly higher. However, because it was guaranteed issue, his health was not a factor. It was a matter of they paid the premiums, they were able to have the coverage. But again, that's only been one client out of, past 20 years of helping people. So it's very unusual. And oftentimes these are conversations people don't even think to have. But sit down, ask your HR department, listen, what happens if I leave this employer? Can I take this? Or when I retire, can I take this policy with me? Do I have conversion options? And if they are, what are the conditions? Do I have to go through medical underwriting? Are they going to ask a bunch of questions? And do I have the same rates, or will my rates go up? And if so, how much will they increase?
Right. And those things, like you said, are good to know. They're important to know because, like you said, if they cancel it, so I've been paying into something and then I get no return on my investment.
Yeah.
That's a little sad.
Yeah.
I don't want that to be, the situation that happens, but how many things that, like you said, are we investing in and we're not seeing a return on that investment? But those are definitely questions to ask. I love that we're having this conversation because, it's taking people back to the baseline. It's taking us back to things that we can put in our toolbox, questions that we need to ask. And like you said, having a conversation with your HR person, even if you're in the market for a job, asking that as part of the questions that you're asking them when you're coming on to their job. Oh, do y'all have a life insurance plan? And is it portable? Is that something that we can go through? Giving us the verbiage that we need. That's something that's so important because you don't know what to ask if you don't know the terminology or understand what those processes are. So I'm thrilled that we're having this conversation and talking about the importance of, doing a broker and not just going with the little flyer that comes in the mail or that's in the insert in a little something that you get. And you just say, oh, I think I'm just going to go with that because I think a lot of our banks and a lot of our, employers and things like that have policies that they push. And you almost feel pressured to go with those because you're like, okay, well, I bank with this bank. So, they're sending a policy. But again, is that the best policy or are they just pushing their program?
Yeah, that's a great point. And that's really a captive policy, meaning that's all they sell. They're not brokers. They don't specialize in life insurance. And so there can be some benefit to that. I mean, a worst case, if that's all you're going to do, get something. I mean, please, I implore all of you to get something. Something's better than nothing. But many times when I sit down with people, they've asked me to review their policies from other brokers and other places that they've received them. And I will say 9 times out of 10, that policy is not what they thought it was.
Right.
They thought they had a cash value. It turns out to be term. They thought they had $1 million. It turns out they have 200,000. They thought it was going to have living benefits, and the living benefits were not built in. So really, you want somebody who's going to get a second set of eyes. If you already have a life insurance policy, it is worth a conversation. Reach out to somebody that you trust, or even pick someone random and just see what they tell you. Talk to a couple of people, right? You've got that policy. Say, you know what? I've got this coverage. What can you tell me about it? And see what they do. What do they educate you? Do they just try to sell you something? Do they put everything down that you've done? Are they really looking over and showing you in writing? Here, see where it says this. Do you see where this is a term? Do you see when this is increasing? Can you tell how much cash value you have? And you want somebody who's going to unpack that for you in regular language, show you in black and white what you have and what you don't have. And not that it's good, bad, or indifferent, but just so that you're educated about what you have.
Yeah. Well, I mean, I think it's key. Again, the relationship. It's about the relationship. Have that person's name. That should be in your phone. That should be somewhere that's as easily accessible. So that way, as you're going through changes, as you're going through employment, as you're noticing that you've been diagnosed with something, that may be the person to call. You may call your loved ones and tell them, hey, I was just diagnosed. There should be a little checklist of people that you contact when certain life changes happen, and to see how those things, are affected. So if I find out that I'm diagnosed with something, now I need to go into speak to my representative and say, hey, I've been diagnosed with this. How is that going to affect my policy? Or is there a change that I should make to my policy as a result of this? So that way, going down the line, if it's something that is progressive, how is that going to affect, my family? How's that going to affect me with regards to, what the insurance covers?
Yeah, and that's a perfect segue. There are basically three types of life insurance. Now, they call them all different kinds of things, but I'm going to break it down really, really basic. There is term insurance, which is temporary. It has a birth date, a date it starts, and it has an expiration date, the day it terminates. Okay. The most affordable way to get coverage is a term. If that's the only thing in your budget, at least start there. And I'm going to circle back to the term in a second. Then the other way that a lot of people know and they've heard about, you alluded to it earlier, which is the Gerber Life whole life insurance. That means it has a birth date and it lasts your entire life. It also has some cash value built into there, and they all work a little bit differently. And although these policies can be very attractive in the words, they can be very cost prohibitive. They cost about 5 times more than a term policy. There's also a hybrid, which is kind of a best of both worlds. It's index universal life, which has the ability to act like a term policy, but it can also last your entire life and build up some cash value. So that's the 3 basic types of life insurance. Any questions about that, Ms. Kim?
Oh, wow. No, I'm sitting here writing it down because I want to know. I like that. You talk about the fact that the term is temporary. And like you said, if you're looking for something, to go with that, the fact that whole life has, can be a little more cost prohibitive. That's good to know too, because those are terms. I think that the term that I've heard most has been the term and the universal.
Yeah.
Where you're getting that combination of both and just trying to, understand how do I go about picking which one works best for me. And like you said, it's based on I guess on age, ability, those kinds of things. Those are going to be ones that are going to push more. Which would they like? A person like myself, I'll use myself as an example. I'm 56 I'll be 56 in May. Is there a particular life insurance that I should seek one over the other?
Yeah, see, that gets really, really deep, but this is how I would make it really, really simple. What can you really afford? I mean, realistically, it doesn't matter if I put all these sexy riders on it and it's cash value. You're going to have millions of dollars by the time you're 90. None of that matters if it's not something you can realistically keep up every month. So that's first and foremost. The second, remember, it's life insurance. How much coverage do you need? How much money do you want to protect your family? Do you want to go ahead and pay off your debt? Do you want to go ahead and replace income? So if you have someone who depends on your income, do you want your mortgage to be paid off, right? Do you want to provide college education for any of your children or your grandchildren? And then I always think of the dynasty. What is a dynasty, or do you want to leave a dynasty in place? So those are the things that you can consider on how much coverage I need. And then from there, most people, if you've never had life insurance, I always say start with a term. That is the most affordable. And by the way, you want something that has 2 additional things in it. Okay, here's a secret sauce. It's a term that has a birth date, expiration date, but you want something that is convertible, meaning that if your health should wane, if you should have a diagnosis, can I still convert this to a permanent policy?
Okay.
That's
right. that was the question I was going to ask. I was going to ask, can you transfer between the different types? Like, can you start with term and then go to whole life or go to universal like that?
If it has a guaranteed conversion rider. And I know I'm using a lot of technical terms, but I want your audience to really lean into, if you don't ask specifically, then you may be misled. You're going to specifically ask, is my policy guaranteed conversion? In other words, there's no medical qualifying. Secondly, and not all policies are. Many policies, I would say about 80% of policies I see in the term are not convertible. So you want to be really clear. Secondly, you want to have living benefits. Living benefits now come along on the policies, a lot of policies as free of charge. They don't charge you for them, but you got to know what companies provide those. And those are things that provide critical illness, chronic illness, terminal illness, and even accident a brighter, so that if you should have an accident or a major diagnosis, that you can pull from the death benefit even if you're still living. I'm going to say that again. It's so good. Let's say you have $1 million in a term policy, and now you get diagnosed with a major illness like cancer, heart attack, stroke. Now, it depends on how critical that illness is, but based on that, you may be eligible to draw from the death benefit even on a term policy. And that's money that comes to you tax-free. Maybe you need to remodel your house, like the bathroom, because now, you're in a wheelchair and you can't get into the shower. Or you have a bathtub, you can't get into the bathtub anymore. You need a walk-in shower. Maybe you have some medications that are very costly. Maybe there's some treatment that is not covered by your health insurance. And by the way, the money goes to you. You can do whatever you want. If you need to pay your mortgage, you just squirrel it away just in case. It's totally up to you. So if you're going to start with a term, those are the two things you want to come along for the ride. I want it fully convertible without medical underwriting, and give me some living benefits. Tell me what you've got. What can I qualify for? Throw them all in there. I'll take them all. Right. Just take them all. They all come along for the ride.
Yes, you see, and that's critical. These are the kinds of things that we need to know. And like I said, there's no class on life insurance. Like I said, you just saw the little billfold and you're just like, okay, I just pay a couple of dollars and that's going to cover everything. And it doesn't cover nearly as much as we think that it does when we start talking about death and we start talking about burying our loved ones, and we're saying, oh, well, they've got a policy, they've been paying on it for years, and then you find out that it doesn't cover anything. So like you said, it's important to know the terminology. It's important to know the questions to ask. And we don't know the questions to ask, so we just go and sign off and think that everything is okay, and then you find out that it's not when you're in the throes of a situation. And that's not the time that we want to be educated on it. We want to be educated on it ahead of time. And again, that's why you want to have that person's number on speed dial, because you want to be able to ask questions. If you're looking at your policy and you don't understand something, who can you go to and ask for clarity on it? Especially if it's a policy that you've looked at or that you've created a long time ago. Pull out that policy if you have an existing policy and ask the questions. I
love your diatribes because it brings up other points that I want to make. We didn't plan this. Listen, we got on and said, go. Okay, there is no rehearsal. Trust me. This is the how now. We're going how now. And we want to make sure that we highlight, if you've had a policy a while, especially, check your beneficiaries. You may be shocked. Every time I do this for somebody, I always find out they have somebody who's passed away. They have their divorced spouse no longer together. So you want to make sure that your beneficiaries are updated regularly. Review them annually. And if you have an agent who's worth their weight in salt, they're going to be there available to review your policy as often as you need to. At worst case, every couple of years. Once a year is great. But you know what? Check in. Things change. Maybe now you have more discretionary income. You started with a term and now you want to go ahead and upgrade it. Maybe you had no debt at the time. You didn't have a spouse. You didn't have a mortgage. But now you bought a home. You have 3 children and you didn't need to add some additional coverages. Anytime you have a birth, a death, a divorce, like a life change, you need to revisit your life insurance and make sure it's still in alignment. And it might feel really laborious, but really this will save your loved one so much heartache if you invest a little bit of time into really understanding what you have, and then you can properly communicate that to them, what you have and what the intention is with that.
Yes. See, powerful words. This is why I love having you here. This is why it's so important that our financial fitness is something that we take just as seriously as our physical fitness, because the effects that it's going to have on you and those around you are going to be, are going to surpass anything that you could think of when it comes to, you know, being clear on how you're going, or how your loved ones are going to handle it, and how you're going to handle the changes that come along. Like you said, lifes. We hear that all the time now. Life is lifing, and we have to be sure that we're checking in on those things, or tying up those loose strings as we're going along, not after it happens, or when we're in the throes of it. We need to make sure that we're clear on things that we need to check, things that we need to have a checklist for, or things that we need to make sure that we go back and definitely update and refine. Just like you were talking about with the when you're talking about beneficiaries, and you're talking about ex-spouses and things like that. I had that happen. One of my ex-spouses still had me on a policy.
Yeah.
And they reached out to me, and I was like, who? I was like, I'm not even married to that person anymore. Well, that person has you listed as a beneficiary, and you're just like, oh, that may not have been what that person wanted, but you definitely want to make sure you're doing that. That's with anything. Make sure that you're updating your information with your employer, because should anything happen to you, and now this is something even in the trainings that I've done at with my corporate position, I've gone in and I've done trainings. I've told people, make sure that you're updating your personal information. You don't want to fall out on the floor and people don't know that you've been diagnosed, or that you have an allergy, or that something's going on, and you have not shared that with the people who need to know.
Right.
Those are the conversations that we have to have. These are the things that you want to have reminders on. These are things that you want to have in place, letting people know, so that just in case you're in a position where you're incapacitated or you can't speak for yourself, somebody knows. There needs to be someone that's a confidant, or somebody that you've had this conversation with, so that it's not just that you're gatekeeping the information and nobody knows. And then something happens. It's not until somebody's rifling through all of your papers after you're long gone that they realize that you had all of these things in place and nobody had a clue.
Yeah, that's a mic drop right there. That's a gold bar. That's a golden nugget. Rewind that. If this is their first time. I'm telling you, there's a lot of wisdom in there. And what I want to highlight, Miss Kim, is that life insurance is really one of the cleanest, easiest way to leave and build a dynasty. If you leave real estate, how are you going to divide it? That becomes can be really convoluted. It can get really dicey. Don't leave a house to multiple people. Please don't do that. It's a disaster. Okay. It is a disaster. Also, other assets, it can be difficult to really subdivide those. Life insurance is really, really simple. And if you couple that, you marry that with a living trust, now you have a true dynasty. Now you have a real estate plan. Now it's going to have the directions on there with what happens, who's your power of attorney, who's your medical directives, and how the life insurance is going to be divided up. And so a lot of times people come to me and they say, I worked hard. I never really made a lot of money, but I want to leave something for my children. Right. I always look at the conversation with life insurance. Can they qualify for it? Can they realistically afford it? Does it make sense? Because if you're going to leave, say, $100,000 cash to your loved ones, but if you bought a life insurance, you may be able to leave $500,000 in coverage. Which makes more sense? $100,000 in cash or $500,000 in life insurance? Spend your cash. Enjoy you. Go do you. Right. And let family enjoy the benefits of the life insurance after we've already, we're already gone, good man upstairs and all that.
Right. I mean, like I said, it's so important that, like you said, that we have these conversations and that we understand, like you said, a trust. All of these terms, all of these things that we're hearing, are foreign to some people, but we have to ask the question. We don't know
Right.
unless we go through the process. I was blessed to have you as an advisor talking about some of the things that I needed to do personally, questions and things that I had not even considered. And all these years I've been on this earth and been doing things and thought that I was doing things right, there were so many questions that I had not really sat down and answered. And it wasn't that every answer came easily. It was like, you know what? I never considered that. There are questions that your representative, that your representative is going to ask you, that is going to be something that you have to really sit down and have a conversation about.
Right.
Especially those who may not have a sibling or may not have a beneficiary, like a child or something like that. Who are you leaving your assets to, or who is the person who's going to be your power of attorney? My husband has an aunt who has no children,
Right.
and right now she is in a rehab center. And the thing is, okay, so who is responsible? Who is the person that's advocating for her? Does she have an insurance policy? And has she been specific in those things? Is she in a space where is she lucid, where she can answer those questions? These are situations that come up that have to be taken into consideration, because everybody doesn't have dependents, or they don't have somebody so who is your person? And does somebody know who that person is? So there are a lot of questions that come with the insurance policy that are going to be life-changing questions or life-altering questions for you and for the people that it's going to affect. So I think it's important. It's an important conversation to have.
Very interesting topic. It's really interesting that I have many clients who don't have beneficiaries. They don't have children, or their relationships are really, disconnected, and they don't want to leave their assets to their children. Then we talk about creating their own foundation. Is there a nonprofit? Do you want to create something of yourself that could be a legacy? One of my clients that I helped years ago, she wanted to carve out part of her life insurance to go to a particular folclorio dance club, which is Mexican dancing with the hats and the beautiful costumes. For her, she said, this was something that helped me through my childhood. Growing up on poverty and where she came from, it was something that was always her solitude, right? It was her way of expressing herself, and she found a lot of great friends and relationships. So she carved out some of her life insurance to go to be donated in her name to that institution as a way to give back. So you can do things like that, or you can start your own nonprofit. Maybe you have a loved one that you want to honor and create a scholarship fund for them, or something like that, or something that's near and dear to your heart that you would like the opportunity to give back from. So I do that a lot. It's really surprising to me, because I never really thought of that would be something that would be very popular, but it actually is becoming kind of a hot topic for people.
Yeah. And so, like you said, there are just so many situations, and that's why no one policy is going to, be the catch-all for everyone. So it's really important to have the conversation. It's really important to determine, like you said, how much are you looking to leave someone? Is there a fund that you want to send it to? All of these questions are answered by someone who is knowledgeable, someone who understands policies and understands more than one policy. And like you said, it's not just trying to sell you one particular product over another. There needs to be, I have a knowledge of these different programs, and I think this one may be a good one for what it is that you're talking about. But it's a conversation. You have to be able to share information with that person so that they can find the best policy for you and be able to articulate some of the ins and outs that come along with that. So,
and find somebody who's willing to not just have one conversation. Oftentimes this is multiple conversations, and it may not just be one type of policy. Maybe you have some term, maybe you have some whole life, maybe you add some index universal life. Most of my clients have a little bit of all of them, okay, because for different reasons and purposes. So find somebody who's willing to sit with you. If you need 15 minutes and you kind of know what you want, great. But if you need a few more conversations and they're willing to be patient with you and walk you through the process, that's really the key. And then your comfort level will increase. And then suddenly it's not this mystifying conversation. What is life insurance? I don't understand it. I don't want to talk about it. Leave me alone. I'm just going to, people think that they're just going to leave and it's not going to cost. It's costly to pass away in this country. Okay, it is costly.
Right. One thing that I wanted to mention, and it was something that happened personally, and I'll share this. You know, we talk about illnesses and things like that, but also understand that if you were diagnosed with something and you can get things better, like say a pre-existing condition like diabetes.
Yeah.
Do you know that your chances of getting a policy may increase if you lower your A1C, or if you're doing it? So you can do things that can help to get you a better policy if you have a condition that you're working towards. If you're working towards building your weight loss goals and achieving those goals, and it's going to cause your A1C to come down to a normal rate, that you may be able to qualify for a policy that you may not have been able to based on the A1C that you had previously. So there are some things that can change, not always for the negative, but for the positive. In my instance, I worked on mine and it worked for the positive. I was able to get a better policy because I was able to get my A1C down. I was able to do things, health wise, that worked to my benefit. So, that's a wonderful inspiration towards, taking better care of ourselves, so that way when we're looking at policies, we're not closing the door on our options, because we're taking better care of ourselves.
And that's where you can come in and give them that 365-day habit, then all the health and all those things, and watching our diets and getting our good exercise in and all that stuff.
Right. Because that can be to your benefit. That can allow you to be, to qualify for something that you may not have qualified for, because you're taking better care of yourself. Just like they're looking at all the things that may be working against you, they're looking at those things that are working for you as well. Oh, we see that you have a history of this, and now we don't see that in your medical records anymore. So those things, I'm sure, can work to your benefit.
Yeah, absolutely. It just comes from having a conversation.
Yeah.
Right. And I would say this, I would add this: don't wait until you get where you think you're going to fit into those genes. Like, get something now and then work towards that thing, that ultimate goal. Because I've seen so many people that they put it off and then they get into an accident. They put it off and then they get a major diagnosis. They put it off and unfortunately they pass away. And I've had multiple people call me, family members say, they said they weren't their life insurance agent. I'm like, yeah, they never put the policy in place. They canceled their policy. They didn't want to, they thought like the premiums were too much. So make sure that you put something in place today, and then work towards increasing your health tomorrow.
Awesome. Well, Leah, like I said, this has been such a powerful conversation and such a necessary one, as we're going into the tax season, as we're going into coming into this new year, and people are maybe coming into some funds and maybe trying to say, okay, what are some things that I need to invest in? Invest in your life insurance, invest in those policies, invest in things that are going to assist you long term. We have to look at that bigger picture sometimes. Yes, we're looking at now and things that we can do now. Now is the time to get those policies in place, because we're not getting any younger. And some of us, we've gotten past that little spot where, that sweet spot of where we could have done it. But now it's like, okay, we're not going to beat ourselves up over what we didn't do. What can we do now moving forward? Like you said, we can go to that term insurance and start asking the questions, start looking for brokers, start doing that little homework. We've scratched the surface, but we want you to at least have, some of the terminologies that you're going to need that are going to help you to get started. And that time is now.
It is.
Okay. Yes. Any parting words that you want to share with our listeners before we, close
Yeah,
things.
absolutely. It's what you kind of sprinkled on. This is just a conversation starter. We didn't even get really deep into the weeds. Just understand that it starts with having a conversation. If you want to shop online, go ahead. But remember, those policies may not answer all of those questions. So, most people are going to want to have a one-on-one conversation, but do something, put something in place. Start today, start now. If you got to start with something small, like a final expense or term, at least put some coverage in place, because people often ask me, Leah, what type of life insurance is the best? And my answer is always this: the one that's in place when you need it most.
There you go. There you go. All right. Thank you so much, Leah, for being here. We look forward to you coming and sharing more financial fitness tips with us as the year goes on. And like I said, we'll be doing this each month. We'll be focusing on a different thing. So make sure that you are looking at the bottom of the screen, scrolling at the bottom of the screen is the YouTube channel, the How Now YouTube channel. Information to contact Leah at www.leahgarcia.io. So that way, if there are any questions that you have, make sure that you're reaching out. DM, let us know what's going on. Make sure that you're following, sharing, and subscribing to the YouTube channel so that you can go back and listen to the information that she was talking about last month on financial tracking, and also this month on life insurance. And so with that, I'm going to say thank you all so much for joining us for this edition of the How Now podcast, where we talk about how to live in the now. And until we see you all the next time, I say peace.